What's up, guys? I promised I'd make this video to somebody, so here it is. I think it's good, generally, though, to have this information out and clarify. I should probably make videos on some of this more basic stuff. Um, but this really is for both those that may have learned more traditional VSA, let's call it that, or if you're just learning how to use the volume indicator. What is high and low volume? Where should I look for it? What does it mean? So particularly here, we're talking about low volume and where to see it, how to see it, when to see it, what does it mean? So a little more specifically than simply looking for, let's say, high volume strength. We know that, right? High volume into a low price, giving it a bit of a bounce, and we'll call it strength. And then from there on, looking for what's called typically a no supply. If we're talking about going long off of strength, high volume, then we want to see following that the low volume and the no supply, right? Which is comes from traditional VSA, and generally we're talking about a low volume signal telling us now to go long. We have high volume strength, low volume supply, high volume demand. So therefore we have an imbalance, and typically we're going long off of the situation. That's typically how we use the volume indicator, right? So specifically, I like to look for these low volume signals in particular places. There are places that are predetermined that I'm looking for it, and that is, as was pointed out to me, one of the biggest differences between how I particularly trade and use the volume indicator and maybe how, generally people may be using it based on VSA and not particularly looking for price areas to actually look for low volume to tell you, in this case, lack of supply, instead of simply just seeing low volume anywhere and saying, well, it's low volume, so it must be a no supply. Well, the candle closed down, or the volume's lower than previous to, so therefore it's a no supply. It's not quite that simple. It's almost that simple. So let's illustrate it. We have an area where really simple stuff here, high volume, sign of strength, right? Price went down to lower prices, hit some high volume, and then had an upward reaction. And most people watching this probably know about that. Okay. So at what point, right, because this is the beginning of an entry, potentially here, let's say if this was a 5-minute chart in the right context, or it's a 1-hour chart and we're defining our background, either way. And we want to see a low volume signal to not only say high activity for buyers before we buy, but low activity from sellers, right? That creates an imbalance and high probability of price moving upward, and that's why we want to get in after seeing those two things, right? So let's do something really simple here. This is a previous. I don't want to be passing that line yet. Let me put that back. Oh, okay, that's fine. So this is a previous support, turn resistance, right? Very simple stuff in technical analysis. And what does this represent? We call it a previous support that once it's broken becomes a resistance level. You may have heard this somewhere else. I didn't invent it. This is sort of off of the template of the market, right? And this level going forward is potentially a resistance, right? So what does that mean, right? That might happen, right? So if this is going to happen or not, right, this is going to be an increase in selling, wouldn't it be, for this to happen? So in this case, we're at an area where logically we're going to be finding out about sell activity, right? If you're a buyer, are you going to buy right into a level that may reject price? You're likely going to buy above it or below it, but not right into it, right? So you'll typically get a big drop in buy activity as you're approaching these levels. Again, particularly from smart traders and high volume stuff that appears, there are places where they're really pausing their buy activity because obviously we want to find out about sellers, we want to find out about supply before we start marking up. We're still in pre-positioning before the up move mode here, accumulation, right? So this is a predetermined level that at this point in time, as strength was forming, you could mark up the chart and say it's a previous support term resistance. So we know going forward, this is supposed to be under that test, that's going to be an area that's going to tell us about sellers. So if we have, let's make it really extreme, which does happen, and it's a good visual here. Situation like this, and then price moves above it, and we have low volume throughout this area. Let's say this is our stuff going on earlier in the day. So this is sort of a typical picture of seeing the imbalance starting to appear. Now, again, you could be in a situation where price is moving up and it's not testing any particular level, and or moving average, which we'll get to. And for me, just to have low volume at a price area that's not telling you about sellers is not going to be really confirming the lack of supply that you're looking for, right? So again, this is a spot where sellers could come in and create this as a resistance level, and that's a test area. And as I always say, higher prices will tell you about sellers, right? Lower prices will tell you about buyers. So in this case, we see the imbalance, and we have to move up, and we have to move away from the area that's turning into this sort of buy area, demand area, right? Which is proven as we bounce up after high volume, right? Stopping volume, accumulation, strength, whatever you want to call it. So into this little sell-off, lots of buying came in. So from this area and down here, in this price area going forward, we know that not only are there long positions coming up through here, but potentially they could step in again, right? So this area is really telling us about buy activity. Again, as we move away off of this level and start to get to some higher obvious levels, we can find out about sellers. Okay, so there's that. Now, the next thing that I use, and this is just an obvious thing that's going to show up a lot of times, a support resistance thing. Let's see if I can change the color. I guess I do it here. So I have the 14 moving average, exponential moving average, EMA. And let's say it's doing that. I guess I can erase that. Yeah. So a second piece of information about sellers, really important if you watch my videos and you know my method, that you know how important this is. Why it is another discussion. But the 14 EMA, exponential moving average, which is this line here now, is a test for sellers area. So again, you're seeing strength, you're moving up. When you hit the 14 EMA, in this case, I made it a confluence with this support because that does happen, and I'm making a point here, but it doesn't have to be a support. Okay, so a test of 14 EMA is nothing else there. That's a test for sellers. That's where you can see, again, information about sellers. And ideally, if you're looking for the imbalance, the volume drops off, and the lower, the better. Again, this is stuff that I've taught, but just to clarify it, and especially in the people who may have just not bought the course and are just learning off these YouTube videos, and it's good to really clarify every detail of this. So 14 EMA, the lower the better on the volume to tell you, again, lack of selling. So in this case, we have a combination of the two. One or the other would have been sufficient to give us information, but it gives even more importance and more reliability when you have things sort of confluence of things that will tell you. Again, as you're moving up, you're always going to be testing for sellers, finding out about sellers when you test these levels as you move up. It could be a 50 fib, 50 to 618 levels that I use as a zone. It could be testing 50 fib, and that's going to tell you about sellers, right? So there's not a million things. It's basically those three things: right? Support resistance, moving averages, fibs. If you like pivots, you can use that or something. And as you move up, you find out about sellers. So again, the no supply is not going to be confirmed just anywhere, right? Is this making sense? It's where sellers will show up if they're interested, right? Okay. Now, just to show, what can happen in the real world, first of all, when you see this, am I the right color? And again, breaking through, you're confirming the no supply situation. You're confirming the high demand situation, and now you're starting to mark up through the test area, and that's typically where I'm looking to enter trades. A lot of you know this, but because the imbalance is proven, and it's likely moving to the next test area, whatever that's going to be. And if I'm up 20 pips at that point, I can see how it reacts and manage the trade, right? But that imbalance marks that entry. Now, just to show in the real world, let's say we're up here and we're testing for sellers, and this happens, right? High volume, similar to the strength volume. Of course, this can happen. And it's just factual information that's telling you on the test for sellers in this area, I hope I drew this big enough, um, there's actual high volume there too, right? The higher the volume here, the more sell activity is coming in. That's how much it just clearly represents that, okay? So if I'm in this situation and I was looking to buy, this tells me I'm not looking to do it now. Now, likely what's going to happen if we're testing a moving average, which I even scalp off of this moving average because it rejects so often, and we're rejecting as part-time resistance, and there's activity there creating this, or even as you get there, the high activity, you expect this is likely going to happen now. And what's going to happen next, right? Again, if there's this much sell activity, you're likely going to move down. Now, what happens here is the next question in this story, right? And I can just give all these different examples. I don't want to kind of dwell on it and go on forever, but here's a little more real world stuff that happens. So let's say you have a fake breakout. So you're seeing, okay, buyers are accumulating here, but there was a lot of sell activity on the test. Right? Mix of buyers, who's going to win out, right? So if we see twice in this area, our classic fake break pattern, and then let's say now, and this is a good point, first of all, this support turn resistance is still there and still valid. So let's say we move up through there on low volume. Now it's been resolved because this showed balance, buying active, selling active, buying active, and then selling inactive, right? If we're going down in volume as we now surpass the test area. And that is now likely going to the next, right? And so on. And if that has low volume here and no rejection and no supply signal, whatever you want to call it, we're likely going to the next test area, right? This basic reading of supply and demand as things are moving. Okay. So this can apply basically, for the most part, this detailed stuff that I got into really helps me enter on the 5-minute, but it also does set your background. So if we're looking to trade, again, this tells you where is smart money positioned from, what positions are they in, and if we had a background that looks like this, then I'd be, clearly bullish going in, and just being aware from a 1 hour point of view, marking up my charts at where the next test areas are going to be. They're good for targets and they're good for information. So let's say I draw let's say I go long in this area, and this is a 1 hour chart, and I'm long off of this situation here. And where's my test areas? What's going to tell me about sellers, supply, high supply, low supply? So again, if we draw, let's say from this high to the low, a fib, right, Fibonacci, and I only use the 50 to 618 levels, which would be about there. And let's say there's a bit of confluence. So we have a general area, right? These levels are very important, the fib, to tell you where sellers are likely to increase their activity. If sellers are interested, if supply is going to come in against your long position, this is an area that's going to be telling you about that. So again, it's not just a no supply because it's a red candle or it's a this candle and it's this volume lower than previous two. That sounds like a really crude programming of software, if you know what I mean. So, if we're moving up through here, how much information am I really going to get about supply, right? I need to get to a level that, and let's say from this high to low, there was a 618, it broke that. And this is sort of no man's land. It's very likely to continue through that because this is where, right, our sellers are likely to come in. If they're interested, we have an area, 50 fib in this case, previous resistance, they could be the same or close, it happens all the time. And we get through here. And again, let's say we get this reaction. Oh, time to take some profit, lock in some pips, whatever. Understand that this trade is hitting a lot of selling, and we may be coming down off of that, right? So it really comes down to support resistance, support turn resistance, resistance turn support, 50 to 618 fib area, particularly as a zone, 618 overshoot, fake breaks, and the 14 EMA and the 50 EMA. But really, when we're talking about the low volume test, after strength or after weakness, the 14 EMA is key, and using that on a 5-minute to do that, up to the minute situation on the 5-minute, looking for that imbalance. So hopefully that covered it. What else could I say about it? Again, the difference is we're looking for information about sellers in areas that are going to tend to attract sellers. It's a level that we have marked in advance that we know before it happens, this is going to be our potential no supply, our potential low volume signal that's going to tell us. It's not a random price area, right? That really doesn't make any sense. Okay. Hopefully that's really helpful for learning charts and how to read them and looking at this high and low volume stuff. Again, remember the principle that lower prices are going to tell you about buyers, higher prices are going to tell you about sellers. And when you get a sign of strength, you need to move up and away from that sign of strength to find out about sellers, to see the actual imbalance potentially there for a long entry. Okay. I'll try to make some more videos that cover basics. I really want to do that because people learning the method, there's certain things that you just, have to know very simply and clearly. And it would be cool to lay it all out there. All right, guys. So I'm still doing the live sessions. You could always join me for some live trading at London Open. My courses are available on our website. And see you in the next video or in the next session. Have a good one.